You're listening to the Black Excellence Podcast, untold stories of passion, persistence, and perseverance. Brought to you by BlackHealthWealth.com. And now, here's your host, Brian Lee.
Hey everyone, today we've got an amazing podcast. We're talking about hitting rock bottom and building yourself back up. On the show, we have Stacey Randolph-Castillo, who has a passion for life insurance, but she's also been building businesses since she was 20 years old. I think there's something that everyone can take away from her story, from humbling herself to starting from scratch to building an empire. Also on the show today, we're going to talk about what you need to do to build a business, and once you've built a business, what you need to do to expand. So everyone, just sit back and listen to the show because we've got a lot to cover. And with that being said, Stacey, why don't you tell everyone a little bit about yourself?
Hey, Brian, thanks for inviting me on. I'm glad we were finally able to put this together. So let's go into a little bit of backdrop about me. I am second generation insurance agent. My dad is the first African-American State Farm agent for the state of New Jersey. He has been there this year. I'll make his 49th year. So hopefully one day he'll retire. I don't know if he's going to work forever, but he's still open, still goes to work at least twice a week. And I grew up measuring houses at a very young age with my dad, listening to the conversations about insurance just at our dinner table, working in the office in the summers as a child. I did not always know I was going to go into insurance. I did work for him, graduated high school. I managed his agency for about 6 years after I got myself out the file room because my dad is old school and they believe in hard work. So he didn't hand me anything. He made me file most of my summers away. And he brought me into the insurance industry through life insurance. The first license that I obtained in New Jersey was a life insurance license. He challenged me to sell, or what they made at that time is called the Millionaire's Eagle Club. So I had to sell that much production credit or face amounts per month and over $1 million in face amounts or coverage amounts to clients in order to qualify for that Millionaire Eagle Club before he sponsored me to get my insurance license. I'm not going to tell my age, but that's probably almost 20 years ago at this point. And so I did that. I didn't know anything else but life insurance because that's what I came out of the file room learning. So I sold that. I asked every customer that I came in contact with about life insurance, every person, all my friends, and I was easily able to sell that on a monthly basis. And that was my first introduction to insurance. I am now an Allstate insurance agent here in the Metro Atlanta area. I have 2 agencies here in Georgia, one in the Brookhaven or Atlanta area and one east of Atlanta here in Conyers. I've been doing this Allstate agencies for the past 12 years. It's my 12th year of business. I had a little break between my dad and coming into insurance. I needed to strike it out on my own, and I went into telecommunication or sales management, which gave me a little bit better view, I guess, of the sales industry as a whole. And I worked for some of the phone companies here in Georgia and in New Jersey. But I was just drawn back into insurance because it's something that I grew up on, it's something that I know, and it's something that I believe in. And so we sell, of course, a wide array of products here, from life insurance, financial services, investments, retirement, all the way up to business insurance, your auto, your home, personal lines.
Tell me more about owning your own businesses at an early age and really thriving at a time where most people are trying to figure themselves out.
I still was young, still immature, not totally on top of things, but I do think I was better than a lot of young people my age. At the early age of 21, I was a first-time mom, had a child. I purchased my first home from life insurance. When I probably was born, my father purchased life insurance products on me. And so every Christmas, he would make us in addition to, I wanted a Cabbage Patch doll on my list. When I got money, I had to take a percentage of that money and put it in life insurance, or I had to put it in some type of savings vehicle, whether it was a savings plan or life insurance. So he taught me those concepts very young. I remember being pissed about it because I wanted another Cabbage Patch doll. My doll was Matilda and I wanted another doll. But at 10 years old, I had to put some of my money from Christmas. I got about $400 at Christmas, and I had to put almost all of that money into life insurance. So it ended up being a blessing because at 21, I was able to take $30,000 out of a life insurance policy and put it down on my first home. So my friends that were just going off to college or just about to graduate, I was purchasing my first home at a closing table at that early age. I had my first child at that early age. My spouse at the time opened a car wash at that age. We did have businesses. He was a bails bond. He had a bails bonding company back at that young age. So we were on top of the world. But we weren't all the way responsible as we should have been at that time, because even though my father impressed upon me life insurance and we had life insurance, like a lot of young people, we let our policy lapse. And in that time frame that the policy lapsed, we were on a high at 21 to 24. By the age of 24, my spouse died in a motorcycle accident. So I was left widowed with a young 4-year-old daughter at this point, almost 4 years old, with no life insurance policy and having to bury my spouse. So the reality of life definitely attacked me. And living so high and thinking these were just normal things that I was doing and not really appreciating them came to a abrupt realization. Because when Social Security gave me a $250,000 check to bury him and $189 a month Social Security to support my daughter, it really got real for me. So, I mean, that story has definitely fueled me, I think, in my success. That pivot in my life has made me very committed to making sure that young men, especially young Black men, are insured and insured properly, and that they have life insurance. It's something I'm very passionate about. I can tell you about the real estate game, and that's great because I was able to buy that property, and I have invested in other properties that have helped me open this business here in Atlanta that I have here. But if you don't have life insurance, you are going to leave your loved ones and your children to struggle, because I did have to struggle for many years after that to take care of myself and take care of my daughter. And that was devastating to me and my daughter. And it was real irresponsible. And as you know, now looking back in hindsight, I know it was irresponsible because a policy for $20 or $30 a month that we could have easily paid should have been a top priority on our list. But at that time, we had businesses, we were taught well to invest and do all these things, but we just were not being responsible, totally responsible. We missed the bar on being responsible at that point. And I do feel like, it's no excuse for it. It's really no excuse for it. It's no excuse for, any young person out here. You're not guaranteed tomorrow. You have to prepare for the worst.
Wow. So what was the turning point for you after hitting rock bottom?
Well, I'm not going to remove prayer from it because you need a lot of prayer. So we'll just put that out there. And I'm still praying every day. Just lit a prayer candle this morning. But I just had to pick myself up from my bootstraps. I looked in my daughter's face, and now I'm a mom. I have 5 kids. And when I look at their faces, I know that I need to instill generational wealth for them. I need to create a blueprint for success for them. And the best blueprint you can leave your children is an example and a strong foundation. So I make sure that I have my will in order. And And I struggled. I worked. We ate pork and beans on any given weekday. We had PB&J for probably 6 months for lunch. We made lunch meat sandwiches, but I knew that wasn't where I was going to end up. I came from greatness, and I knew I was going to come back and rise to the top. So in anything that you go through in life, you just have to be prepared. There's a cycle. And so I just prayed, and I knew, and I believed in my cycle. And so I filed bankruptcy. I knew the game. I went ahead and fixed my own credit. I didn't pay somebody $2,500 to fix my credit and add fake stuff on it. I did the work. I went ahead and I disputed things on my credit. I made payment arrangements on those things on my credit. I paid debt down off of my credit. And I took my credit score from a 480 in 1999 to over 750 now. So, but I did that one step at a time. It's no quick fix for hard work. It's no quick fix for success. And I just went ahead and did the work. I humbled myself. I took my steps and I went backwards to come forward. I relocated. I came here with no friends, no family to Georgia. I didn't even have a cell phone when I moved to Georgia. I didn't even know if my furniture was going to show up. I put my stuff in Big John's truck that I met at the Stop and Shop that said he was going to deliver my furniture for $1,800. And I moved here by myself with my 2 daughters, and I stepped out on faith. And that's what a lot of people have to do. So you got to step out on faith and be encouraged and believe in yourself. The power of belief is awesome. It'll take you where nobody else can take you. So I just had to get back to my core and do that. And I moved to Georgia in 2001. When I moved to Georgia in 2001, we rented an apartment. It was rent controlled. I had another child by this time from a rebound relationship. And I'm not embarrassed by any of those things because they made me stronger where I am today. I went ahead and humbled myself. I went back into insurance. I worked for another agent for $10 an hour so that I could get back into the industry. And I went to every networking event Atlanta had. And I marketed myself, and I got contacts, and I started getting people to refer me real estate clients and customers, and I grew his business. His name was Ruben, and I grew his business. He was with Nationwide, and I structured his company, hired all his people. I left him, went to work for somebody else for $25,000 a year, Joanne Coates at State Farm here in Georgia, and I grew her business for a year. And then I applied for Allstate to get an agency. I didn't have a pot to piss in or a dollar or a window to throw it out. But I vetted Allstate, knew I had to have $50,000 to get this agency. So I believed in myself so bad, I presented myself to Allstate that I had $50,000 and I didn't have $5. And I vetted them and interviewed and passed all the exams and didn't have any money. And while I was vetting them, I was fixing my credit more and more. And I went ahead and bought a house here in Atlanta, in Conyers, Georgia. And in 4 months, I flipped that house around or refinanced it and pulled out the $50,000 that I needed to open my agency. And I called Allstate back and told them I finally decided I wanted to go with their program, even though I really was playing the whole time because I never had the money to open it. And I went ahead, got my $50,000 wired into my account at a over the phone closing, not even in an office. It was over the phone, a notary sitting in my living room closing that deal. And I opened my agency with 0 customers. And I grew this agency to over a $2.3 million book at this point. So we have over 3,300 customers, and I did that all by hard work and time.
So it seems like you've built several businesses from scratch. What's your advice for people who are looking to start their own business from scratch? And then also, once they've started, what's your advice on expanding that business? Because I've talked to a lot of small business owners who are scared to expand, or they don't think that they can hire additional help or additional employees.
Okay. First thing is you have to believe in your product. Whatever your product is, that's the first. If you can't sell it to yourself, you can't sell it to other people. And that's the bottom line. So whatever it is, if it's a concept, if it's a physical, tangible product, if it's consulting, if you wouldn't hire your own self, nobody else is going to hire you. That's number one. So you have to believe in your product and believe in yourself. You have to, I would say, you have to watch and learn. You need to mentor with somebody else or watch them, stalk them, whoever it is that's in the business in which you want to go into that is successful, and you need to see how they do it, and you need to critique it and see how you can make it your own. And you can make it your own. You can do what they did, and you can do it better. That's one thing. So just like anything, like I'm a little bit technically challenged. I'm just getting on. I only been on Instagram a year and a half. I'm just getting on the internet really out there like that. I'm a more private person, but the industry is calling me to do that. So the best thing for me to do is link up with some other people who got 70, 100,000 followers and watch them and see what are they doing that I can do. And then I try to do it, but I try to make it my own. I don't want to steal somebody else's thing. You got to create your own thing. You cannot go out here and think you're going to copycat somebody's stuff. You have to make it your own. So that's the first thing. You need to get your stuff in order, your paperwork in order. What I run into when people, especially my people, operating businesses and young people, you cannot operate a business like it's a bargain basement. You have to operate it like it's a business. We not the bootleg pocketbook man. Get yourself incorporated. It's so simple. It's like $100. Go on the internet and fill out the paperwork. I mean, just apply yourself. Go ahead and get yourself structured. Now, as far as expanding and building a team, that takes time and is always taking work. A lot of people say to me that I travel a lot because I need to recharge my battery often. I burn out. I'm getting older. I got 5 kids. I got 8 employees, 2 locations. I got a construction company. I sell real estate. I do a lot of civic and service. Lucious things or, serving my community. So my battery drains out quick. So I go and travel a lot because I'm recharging my battery. But people don't realize when I'm in Miami on the beach, I'm working on my phone. I'm talking to customers. I'm closing accounts. I'm marketing. I'm texting. So embrace your business as it is your life. This is me. Allstate is me. Insurance is me. It's not something I just do Monday through Friday, 9 to 5. It's something I do from sunset to sundown. When my eyes open to when they close, I'm still working, whether I'm in this office or not. You do have to know your breaking point as far as if you are always in your business, you're never working on your business. You cannot be in the business, running the cash register, taking the payments from everybody and growing at the same time. You have to get out and meet the public. You have to meet. I would encourage people, you want to meet 5 to 10 people that you didn't know every day. So tomorrow, whoever you know today on your list, try to meet 5 more people tomorrow. And the next day, 5 more people. And the next day, 5 more people. And then ask those people who they know so they can refer you some customers. You cannot, closed mouths don't get fed. You have to be out and letting people know what you do, not just on social media, but in your circle of influence, in your community, wherever you go. When I'm at church in the pew, if I'm going to pray for you and hug you when we leave at benediction and tell you to have a blessed week, why can't I give you my business card? That's what I feel stops people from really expanding, because they're out here in public, but nobody really knows what they do. When I first opened, I had my whole truck bubble wrapped with my face and my Allstate agency, but too many guys was calling here trying to date me, so I had to take it down because I was trying to just let everybody know what I do, not get the next boyfriend. But you can't be scared of anybody, but you also have to know that you cannot constantly work in your business. So sometimes I invest money in people, LSPs or licensed sales professionals, because that same concept of I need to meet 5 people, I have to impress upon them. because at some point I'm going to be inundated with the amount of people that I can meet. So I have to duplicate myself with other people in this office, because now I'm making branches, right? So sometimes you're going to get to a point in business where you're not going to make any money. It's going to be just money in and money out. It's the same money. However, eventually it'll start, in my business, a residual income. So eventually it'll start compounding. So if I can meet 5 people a day on myself, if I multiply myself with 8 employees and I tell them to meet 5 people a day, how many people are we meeting? We're meeting 40 people a day. So of course it's going to grow. It can't help but to grow. So sometimes you have to step back and say, I'm not going to get money right now, but in 6 months when this person renews, I'm going to get my money. In 12 months when this policy renews, I'm going to get some more money. And then the next 6 months, I'm going to get some more money. So it's the law of large numbers. It's going to compound. And each situation, I'm going to say each entrepreneurial situation is different. So know your level. Stay in your lane, as people say. Know your level. Don't try to keep up with the Joneses. Grow your business at the pace in which you need to grow it, because everybody gets some sunlight and everybody gets some shade. So it might be my year to shine, and next year could be your year. So don't try to keep up with me. Just keep up with you. Whatever you're doing, just keep doing better at what you're doing, and eventually it's going to add up.
That's great advice. So for people who are interested in selling insurance, what are some of the exams that they have to take in order to become licensed?
On a basic level, you only have to take a 40-hour class. 1 week, 40 hours, 1 work week, or 2 consecutive weekends most schools will offer you. Some of these classes you can get online. So you just have to take the class. It might be an average of $300 in your state or wherever you're at. And then you take the exam and you pass it, right? And so now you are licensed to go. Doesn't mean you know what you're talking about, but you are licensed. You halfway there. You document it. You got your paperwork in order. And that's it. It's not a deep license to sell your basic policies, your basic fixed policies. Then if you want to go deeper in the trade, you have to get you would have to go and get like a securities license. Like I have an investment in securities license, a Series 6 and a 63. So that you can go with variable products, you can go with some retirement planning, you can get a little bit deeper in the trade. And depending if you want to go into my industry, or you want to go into the banking part of finance and insurance, you may want to get a Series 7, which puts you on the stock market floor in trading. It's a little bit higher than the 6 and 63. I think they're almost like sister and brother exams if you ask me though. So, I mean, those would be the steps in progression. And then, of course, you can get like management certifications, 24, where you can manage reps. You can go in and get a CFLU, where you're like a certified financial advisor. You can get all these other certifications. But on a basic level, it's a 1-week course or 2 consecutive weekends for about $300 that you can invest in yourself to get into selling life insurance.
Earlier, you mentioned that your passion is life insurance, especially when it pertains to African-American males, Black males. But can you actually break down what life insurance is and the different types of life insurance? Because I don't feel like a lot of people have a very good grasp of the various aspects of life insurance.
Yes. Okay. And it's real simplistic. And I applaud you for trying to find out the answers to these questions. Because, I mean, if you seek, you'll find. If you ask, people just ask somebody, they can find out these easy questions. Okay, so let's make it real simple, stupid, so it's real easy for everybody to understand. We're going to start with the basic. The most basic coverage you can get is term, right? It's like just getting a car that can get you back and forth. You're getting that 1990 Honda that's got 300,000 miles, but it can get you where you got to go, right? So it's some protection. Something is always better than nothing. Term is you can get a 1-year renewable term, 5, 10, 15, 20, 30. What that means is you pay for a product and you got $100,000. Say you pick $100,000 worth of coverage. You got $100,000 worth of coverage for 5 years, and you pay $20 a month. Or you got $100,000 worth of coverage for 10 years, and you pay $25 a month. Or 20 years, and you pay $30 a month. Or 30 years, you probably will pay $40 or $45 a month, right? Because a 30-year term product, to me, almost is the same as a permanent product in price when you go 30 years. But that just means for 5 years, we're going to cover you. So you're gambling. You're playing the odds. For 5 years, I had this coverage. But if I don't die in 5 years, I don't have any coverage. So you always have to know. It's just like when you start out, when you first get your license, you start out with the Honda. But you may have dreams of that Mercedes, right? You can't afford the Mercedes. So you get the Honda till you build up your credit, you build up your money, and now within that 5 years, okay, I got more money. I can upgrade. I can't get a Mercedes yet, but I'm gonna come out this 1990 Honda to the brand new, I don't know, Dodge Avenger or Dodge Challenger. It's not a Mercedes, but it's coming up the next level, right? So you can convert that term to something more permanent. And that is always your goal, because the term is just a starting point. It's just a starting point to have some coverage, that you have some protection for a certain amount of years. That's all it is. And the goal of it is to convert to something more permanent for the future. What you're locking in with the term, though, you can buy a lot more coverage with term coverage for a cheaper premium, right? For the younger years, like when your kids are small, you want to get that for, you may buy a term when you first have a baby, I don't know, $5 million, right? Because you got enough income, you got young kids, you need to raise them to their 18. So if something happens in 20 years, you want to make sure those kids have money. So you might get $5 million. I'm just making up a number. And it's going to be affordable. It's $100 and some a month. You can afford it. But your kids are going to cash out with $5 million if something happened to you when they're young. That's all you're going to get out of that. Then we're going to go up a step. Old school is a Cadillac. Like everybody old school wanted a Cadillac. All the new people wants Ferraris or something, Lamborghinis. Old people don't know nothing about Ferrari. So the old school is whole life. Whole life is a permanent product, right? It's tied to a fixed investment that the insurance company picks the funds that is in being invested. Generally, they're going to pick something like a government bond that's yielding 3% interest rate. It's guaranteed money that they're investing in. So it's a permanent product that's going to take you to age 100 when you die. And it's building some cash in it at a small rate of growth of 3%. That's all you're going to get back. And the insurance company could make more, but they're not going to give you more. They're only going to give you 3%. And they probably won't make much more because they're putting them in very safe investment risk, right? Stuff that they know they're not going to lose money on, stuff that's going to grow real slow and steady. So you may have a whole life coverage for $100,000 that may cost you $60 a month instead of that term that was $5 million at $100 a month, right? But you know that it's going to be there until you die, and it's going to have a 3% growth on the overage. So let's talk about that, because there's expenses in whole life or permanent products, meaning your premium for this $100,000 in a whole life actually might only be up to age 100. Out of that $100, it might be $50 of it is going towards how much the actual coverage costs. The other $50 is what they're investing in the fixed account for 3% that you can borrow against. So that is why you're getting cash accumulation, right? Most people only pay what they're minimally required to pay, which would be the $100. The game with the permanent insurance that you can get to get your kid a house and take $30,000 out when they're 21 is to pay more than the minimum. You never want to pay the minimum. You want to overfund these products, because these are the only vehicles that I know of, other than you hiding money under your mattress or putting it in the bank, that you can put money in You're gaining some interest on the money, even if it's 3%, and you can take it out before 59 and a half and not have any tax penalty. Because when you take the money out that has accumulated, you take it out and it's called a loan, quote unquote, by the insurance company. They call it that so they don't have to report it to the IRS. So you get to put the money in. You're gaining 3% interest in a whole life. You can gain up to 10% interest in the universal life, like 10.5%. And then you can take that money out prior to 59 and a half, and it doesn't report. When you take it out, they say you borrow it. You're borrowing it for 1 to 4% payments back. But the great news is if you don't pay it back, you just start with zero. You're just rebuilding it back up from zero. You still have life insurance. You don't lose your policy. They're just saying you owe them. But as long as you owe them, you'll never be broke. That's an old saying that people say. Because you never have to pay them back. They just didn't have to report it to the IRS. The universal life works just like the whole life. The insurance company just invests the money in something a little bit more aggressive where you can get more returns. Right now, the returns are low everywhere, but they keep jacking the interest rate every time I turn on CNN. So this is like buy low, come out high. This is the time to invest money in these type of products because the interest rate is so low. When I got in the game selling insurance, I've seen the interest rate as high as 12% on your money. So those interest rates are going to get ready to come back up. Same concept is just the universal life. We can invest your money a little bit more aggressively, but we still have to guarantee you the same levels that you would get on the whole life. And the policy expenses are lower. So more of your money goes into the investment on the universal product. So that's the new investment. Old school is the Cadillac. The new is the Ferrari, which is your universal life. Variable life works exactly the same. The only thing is the risk tolerance of the investment. Now, variable requires the customer to figure out where they want their money to go. And the customer to stay in tune with the stocks or the market of mutual funds and pick if they want a growth fund, a cap fund. They pick the funds their money goes in. So you have some culpability in how you invest in your money. You have control also at the same time. So that's why insurance companies do what's called suitability. We need to see if you are a suitable candidate to be in a variable product. And that's why I have to have an investment license of 6 and 63. I can't put you in something variable and you don't even understand basic term insurance. You don't understand the stock market at all because I'm not babysitting that variable account. You're not paying the insurance company to watch it. So you are the one responsible for moving your money around in there. But where there's more, much is given, much is required. So the more risk, the more possible reward or the more possible loss. But you have to be an avid investor and understand that is on your control, that you're the one responsible for that. And there are some people that's a great product for because they are familiar with the stock market and they are familiar with the mutual funds or the different funds that we're investing in and they can watch it. Group insurance, I hear this all the time. I got it at work. Okay. I don't know in your millennial age groups or my age group, I don't see many people retiring from a job. Everybody's an independent contractor right now. Everybody wants to own a business. Everybody works for themselves. Everybody's 1099. It's not a lot of people like our parents that work for a job and retire after 30 years from that same job. These jobs going out of business, sending jobs to other countries. You cannot bank on that. You giving your kids future and generational wealth to the job you work for. They shouldn't be controlling how your kids going to eat. If something happened to you, you should be controlling it. I never worked at any corporate job that I know that when my kids had a cold, they showed up there. When my kids needed sneakers, I ain't see them at the register paying for them. When I needed to put ballies and barrettes in somebody's hair, nobody was over there getting the hair braided with me. So I don't know why people say that, because that job has no vet. That's just a group benefit that they're doing to retain employees. It has, they don't have no real vested interest in how your kid's going to eat if you pass away. They're going to come to the funeral maybe, and then they're going to leave. And that's it. They done with it. They're not going to be there riding no bikes, going to graduation, being at somebody's wedding. They're not going to show up with that. You need to control how your kid's future is going to be, not them. So it's great if the job gives you some benefits, but you need to always, God bless a child that has their own. You need to make sure you have your own life insurance and purchase your own policy that you control and you pay for. The job is there to give you work and give you a check. Now, what you do with that check is on your control.
No, that definitely makes sense. So why don't you tell us a little bit more about some of the other products you have too? So I know you all do like business insurance as well as business owners expense products. You want to talk a little bit about that?
Yes, as we talked about the entrepreneurial spirit, when I talked about getting your business in order, I offer group benefits. We offer supplemental benefits. We do major companies like Walmart. We handle their supplemental benefits. We handle the life products for them. And I would still sell it to any company. I still would encourage the employees to have their own individual stuff. But for those of us that are self-employed, right, we don't work at a job that supplies any of these benefits. We need to know what they are and purchase them ourselves. So when we incorporate our business, we need to make sure we insure our business. I see too many people. I'm going to just pick one industry I'm real familiar with. Well, realtors and real estate investors, that's one, and barbers and beauticians. They buying all these expensive, barbers and beauticians are buying these expensive clippers, these expensive tools, all this equipment to put in their business, but they don't insure it. You have to not only have your business license in order, but you need to make sure your protection is in order, because your business is also part of your livelihood. And if something goes wrong with it, you need to make sure that you can keep it going. What is your why? That is the question that everybody needs to ask themselves. What is your why? Is your why your kid? Is your why leaving your family something? Or is your why just your image right now while you're alive, and then when you die, you don't care? Do you really want to leave a legacy that can go on? Martin Luther King died. We go to the Martin Luther King Center. Can any of y'all do that out there? Fund that? Like a lot of people put these centers up. If you want to have this living legacy, you need to leave it. So we have business insurance, okay, that'll protect these assets for real estate agents. They ride around with expensive laptop, the signs, the phones. You have customers' information on your computer. We have cybersecurity part of our policy. So if somebody breaches your stuff and steals your customer's account, like Target, you have coverage to litigate that and protect you from that. That's part of a business policy that we offer. That's something that people need to make sure they purchase. Business owner expense. You talked about having these employees. If something happens to me, who's going to pay these people? Because behind every closed door is a cracked whip in the business. Even if I'm not here, I'm cracking a whip on them. I can call them in here. I'm calling them daily. What you do, what you sell, how many calls you make. I'm cracking the whip constantly. If I'm not cracking the whip, my business is probably not going to make the same amount of money. I was going the whole month of February, and I feel the difference in my production from me being out the country for the whole month of February, because I wasn't really cracking the whip. You have to insure these expenses. So a business owner expense, if I'm traveling and I become disabled, what happens with that policy is it will reimburse me up to $10,000 a month for the expenses, the rent to get paid in here, the lights to stay on, to pay the people that work here, the utilities, right? That's the check. So at least I know if I'm disabled and I can't come to work, it still can be open that when I can walk again, I can come in here and crack my whip again. Because all those expenses been paid up to $10,000 a month. That's an important policy. And that policy only cost me $128 a month. So I think the benefit is well worth what I'm paying into the policy. Disability income. because I'm responsible for everything. I need another check. If I become disabled, that's to pay these people and pay the rent. Who gonna pay me? So I need another policy for another $100 and some a month that'll pay me a check for being disabled if that happens. You have to protect against these things because these are real things that I see with my clients. I see on the news. I see with people every day. I got customers that are in good health. I had one customer, great health, 39 years old. This man is 2 years to live. He's about to die. 2 years to live. Can't walk. No faculties. He has a rare disease that he was diagnosed with, and it's like ALS, and it caused him to have some type of dementia, 39 years old. I just found out last night a classmate, an 8-year-old classmate of my son, Rochelle, was just at my birthday party for my son in September. I just found out last night she died of a heart attack in front of her kids in the house last week. I didn't even know about it. I'm disgusted about it. And she was 36 years old. These are real life experiences. Real people, real life experiences. So you got to prepare for those experiences. And let's talk about that. Terminal illness. That's one thing I forgot in all the life products. Because that customer that got 2 years to live, they came and consulted with me. He's 2 years to live. Now, in part of our policy, we have an accelerated death benefit. It's part of the policy. It's free. You don't even pay extra for it. That if you are diagnosed by a medical physician with 1 year to live, terminally ill, you can come back to us and get 80% of the death value or the face value of your life policy up front. So when they came to me and talked about the 2 years, I can't do anything right now because it's 2 years. But if he get within 1 year and two medical physicians say he's within 1 year, he got a $300,000 policy, I can give him 80% of it. So that he can live his last year and make his own final arrangements with his money. So there are living benefits to life insurance, not just death benefits. Because I think that would give him great memories with his kids and families in that last 12 months of preparation.
Yeah, that's great. And I didn't even know about the cybersecurity insurance. I'm probably going to have to follow up with you about that. That's just one of the things I worry about, even with putting together a platform like this. Could you also talk a little bit about the process for actually submitting claims? So if someone actually does get insurance and then something happens, whether it's the barber, beautician, and they lose their products, whatever it may be, what's that process like in terms of submitting a claim?
Allstate, like many other companies, State Farm, all the major companies, it's going to be a 1-800 number. It's an easy process, just like submitting a claim on your car. If you had a policy and it's in force, if it's a theft, you have to make a police report. Now, I will be honest, theft, fire, of course, insurance companies scrutinize those claims. But if it's real, your paperwork is in order and it happened and it's documented, it's going to get paid. So you just get a police report. I always tell my people, get a police report. Don't, like a car accident, when somebody be like, I'm going to pay you next week when I get paid. Let's just not call the cop. Don't listen to that. Call the cops, get a police report. So whatever it is with your business, if a pipe bursts, right? Generally, the cybersecurity is a theft. So you get a police report, you report that to the police, you call the 1-800 number, submit the claim. They're going to want you to kind of backtrack because they'll help litigation. They'll help with fees or repairing the people's credit. All of that's part of it. And that's a very minimal part of it. Beauticians and barbers. This is the one thing I had with them. Most people now rent a chair, right? So the barber, he owns the barber shop. He has his own policy. None of those people that rent a chair from him are covered under his policy. They're independent contractors. Each one of those barbers have their own policy. That's one thing they don't do. That's major. So I had a major salon down here had a fire. Stuff burnt up. Nobody's stuff in the shop was covered because none of the other people in the shop had their own coverage. We told them, but they didn't want to pay for it. They are operating as an in-home business under our guidelines. So it's all I need is their license of their hair and barber and beauty in Georgia, and they can get a policy. I write Georgia, Alabama, and South Carolina at this point. So they can get their own policy. That's one thing they don't do. The cybersecurity, like you said, you didn't know that it's data compromised. We offer coverage. It's very easy. It's just like submitting a claim on your car insurance. You just call the 1-800 number, submit the facts of the claim, and within 24 hours, you're assigned a claim representative. You were saying it's good to keep receipts. I try to encourage my customers. I have some customers. I insure a lot of bikers with these high-end expensive bikes, these Harleys. $50,000 plus they put another $30,000 on a bike. I tell them, bring the receipts. Bring the receipts in here, and I scan them. I got an online document station right on our computer. I just scan them and attach them to that system. So they're always there. Because you need to keep as many of the receipts or the paperwork for your equipment. Try to keep a backup. But this data security breach, I mean, the DNC couldn't stop it, so I don't know why other people think they can.
Exactly. There's really no stopping it. If certain people want to get into your stuff, certain hackers, they're going to get into your stuff. With that being said, what are some ways that people can get in contact with you?
Okay, my contact information, I'm going to give both offices information. 770-483-2070 or 404-638-6593. They always can Google. If they just go on Google and say Stacey Randolph or Stacey Randolph-Castillo, I'm going to come up either way on Google at Allstate. They're going to come straight to my website. They can contact me on the website. The email comes straight to my phone. Or they can email me at srandolph, RANDOLPH, the number 1, at allstate.com. And they always can just shoot me an email, Google just my name. I think I'm like the first 10 pages of Google when you Google my name, so you can't you can't miss me all over Google. Thanks to Allstate. And so you just go on there, Google my name, you're going to come straight to the website, and that email comes straight to my phone. If they ever forget, if they just remember my name, it's going to come straight to my phone. They can also follow me or like us on Facebook. Again, that's Stacey Randolph-Castillo at Allstate. The Facebook is out there. And they can follow me on Instagram. Instagram is a little different. I have it under my civic organization, and that's Red Bottoms in Business. And I think we also have an RCA group. We have an RCA group Instagram as well that we just created. But they can go Red Bottoms in Business, and they can follow me on there.
I'll include Stacey's contact info in the show notes in case anybody wants to contact her as well. Also, Stacey, why don't you tell us a little bit about Red Bottoms in Business?
Red Bottoms in Business is in line with the same thing that I'm doing. I'm going to just throw this crazy story out there. In 2011, I was a victim of a home invasion in my house while I was pregnant with my last child. After that home invasion, I really went on this servalicious, I need to do service in my community. So I just need to be more involved in my community because I feel like I don't have any ill will towards the people that came in my house. I feel like they might be a product of their community. And that's why they feel like robbing somebody else is their pathway. And I just got on this real service committed thing through that experience that I want to touch people in the community, the kids and the youth and the teens and the young men and the young women that think robbing somebody is the way out, because there's many other ways out, and show them that it's many other ways out of their situation than resorting to any type of crime. So through that, I started ramping up my volunteerism, and then I also created Red Bottoms in Business. And Red Bottoms in Business is the blood that connects us all in businesses. Because I feel minority businesses as a whole, we get money and we leave the hood. We need to go back to where we came from, what we're familiar with. And we need to encourage those same children that are there that they can come out and do the same thing. And that's something we can do without a grant, without a whole bunch of money. Everybody has something they can cut out of their budget and invest or give back to somebody else. So I founded that. I think March of 2015 is when I I really started this concept. And initially, I just was going and paying people's daycare bill. On Tuesdays, I would do a lot of pay it forward acts with my own money. Just go pop up somewhere and pay somebody's gas, pay their groceries in front of me. Let them be encouraged and let them know other people care about them out here. They're not struggling by themselves. I would just run up in any random daycare and pay people's daycare bill. If they were behind on their daycare bill, I asked the people in the front who's behind, and I paid their week. Why not? If I got $100 or $200 extra dollars, wash my own hair that week. I don't need to, I can slow back on, everybody can slow back on some weave every now and then and try to help somebody else. So it's okay to help other people. And so that's what I founded it on. And it's about motivation. It's about business owners, minority-owned businesses sticking together, helping one another, education, training, business 101 classes, work-life balance for women, all these different educations, anything that I can speak to or I can collaborate with someone else to speak to help anyone around me, I'm all for it. And that's basically what it was founded for. So I kind of use it as my platform to be involved. I was involved in a Black Friday film remix, so I'm excited about that. Leaving bills or benefits. With life insurance, you'll never leave a bill because the creditors can't take it. It's not your money, it's the beneficiary's money. So you can never leave a bill through life insurance. You can leave a bill through everything else, but you can't leave it through life insurance. And I have some more things to come. I would love to insure 100,000 Black males before the end of this year. Because we need it. Because I hear the news and everybody hears the political climate about the Black Lives Matter. And they do. And all lives matter. Brown lives, yellow lives, everybody's lives matter. But they only matter to the parents in our community. If we make them matter to the insurance company, if 300 people that was murdered last year had insurance, life insurance, for even $100,000 a piece, do you think we would have to march on Washington?
Not at all. They'll be marching for us. The insurance
company.
companies.
Nobody had to leave their house. If 100 people had insurance for $1 million that was gunned down last year in error, nobody wouldn't go nowhere. The insurance companies will get that act right open real quick. That'll stop immediately, expeditiously. We wouldn't be marching about nothing.
No, that's a good point.
So I'm just committed to that, and that's kind of the things that I do under Red Bottoms in Business. It's just my avenue to give back and try to encourage and help and empower other people.
Yeah, that's awesome. So I'll include info about Red Bottoms in Business in the show notes. Is there anything else that you wanted to cover?
No, I think that's great. I enjoyed the podcast. I enjoyed the interview, and I'm so glad you were able to do it.
Definitely. I'm glad you came on. And I think you gave a lot of helpful information, and I'm sure people are probably going to have a positive response, probably have other questions or comments coming out of this interview. So definitely, I thank you for this.
One thing I think we forgot to touch, I just want to say this real quick. It's tax season. We talked about avoiding tax obligations real quick when we had spoke. We need to make sure these business owners that have, extra money out here, why pay the IRS the money when you can put it up for yourself for later? Now, there are plans. I'm going to just mention them, SEP and a 412 ERISA plan that we offer that you can put some money in. 412 is for people that want to put more than $54,000 a year in. A SEP is up to $54,000 a year. A 412 plan is something a little bit more extensive, a lot of discretionary income that you don't want to, you want to avoid paying taxes on. If you're going to pay it to IRS, he's never going to refund it back to you. So you might as well put it up for yourself. And these are plans that we need to be aware of as a community and business owners. And it's a level. It's levels to everything. Like we said, it's levels to this. So not everybody has $54,000 discretionary income. But there are some business owners that do. And they have more. And they need to put it up. And these are the plans and the pathways in which they can do that.
That's a great point. It's definitely helpful information. And so I'll include some info about those plans as well in the show notes. And thanks again for coming on.
Thank you so much, Brian. You have a great day.
You too.
All right. Bye-bye.
And there you have it. I hope that this episode was helpful to you. I hope that it was inspiring to you. And I hope that it was motivating to you so that you can go out there and take action. Make sure you take the info that Stacey provided in this podcast and apply it to yourself today. Also, if you don't have life insurance, make sure you go out and get life insurance today. If you found this podcast helpful, please subscribe and review. We need your subscriptions and your reviews to help get the word out about the podcast so that we can continue to provide you great content.